Hey everyone, Couch Investor here, back to another video for today. So let's talk about a company that is down over 50% this year and is still trading at a very high premium. Now throughout this video, I will show you why exactly the market is giving this company a premium, just like I did during the Snowflake video. Now the trade desk is obviously in the advertising space. We know that ad spend is coming down. We know that ad spend has been coming down throughout this year, but even with all of that, the trade desk has kept on growing and it's profitable. And this is how the company looks like today. As you can see here up top, forward PE 42.9 times. In the current market, that's pretty crazy. Market cap of $21.5 billion. As you can see in the last couple of years, revenue has been trending up quite nicely, free cash flow positive. Return on equity has come down recently. If you look at gross profit margin, over that 80%, nice. Then price to sales ratio, of course, it has peaked a long time ago. It has come down, but still today, even price to sales ratio in the next 12 months, we're at 12 times. Not cheap. Of course, you could find other companies that are also trading at 12 times or maybe even more, but still, currently trading that high is not cheap at all. So why? Why does the market give the trade desk such a high multiple? I will try and answer that question in just a second, but first I would really appreciate it if you hit that thumbs up button and subscribe if you have not. And if you want to support me and this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor and make sure to check out all the other links in the pinned comment, some of which might actually save you some money. So first of all, these are the consensus EPS forecast for 2022, 23, 24, and 25. Of course, when we look at 25 and 24, just two analysts and one analyst there. But if you can see here, year-over-year growth, quite nice. Now for 2023, of course, things might change extremely fast. If we go into a hard recession, let's say, then this number might be lower. But for the sake of this video, currently analysts expect EPS to more than double in 2023, then close to double again in 2024, then in 2025 grow another 40-45% or so approximately. So this might be one of the reasons why the market is giving this company a premium, but that's not enough, right? Let's have a look at their recent report. So this is the trade desk by the numbers. Gross spend throughout the years have been growing tremendously. Fiscal year 2021 grew 47%. Revenue grew 43%. Now, I would like to show you two pictures here. One on the left is their, let's say, number. So they're targeting a massive total addressable market of around $816 billion for the total global ad spending. Now on the right, you can see here, according to eMarketer, digital ad spending worldwide from 2021 to 2026. Only in 2025 will it reach over $820 billion. It would reach $876 billion in 2026. Just to show you that, well, the market that they are targeting is growing and is extremely big. Now, let's continue. Now, in past videos, we've talked about this more in depth. This is just a quick overview of Unified ID or UID 2.0. They say here represents an upgrade, not a cookie replacement. Of course, when it comes to privacy on the internet, nobody really likes to be followed around. That's why VPNs are so popular. But they came out with UID 2.0 a while ago. It basically allows you to keep your privacy, but it also allows advertisers to, well, advertise correctly. Because there's one thing that advertising hates, and that's the fact that they spend money and their return on investment is not great. Which leads me to this point right here. On the left, you can see traditional TV buying, $10 CPM, cost per mil. You can see the arrows hit the target, but miss the bullseye. On the right, connected TV buying, $20 CPM, but you hit the bullseye. And especially in the current market environment where advertisers and major companies just spend less, the amount that they are spending, they do want that money to put to work correctly. And so this is also one of the major reasons why the trade desk is still growing while the advertising market is growing, well, at a slower pace. And a quick overview at the focus of the company. We've talked about all of that in previous videos. So number one, connected TV. You all know my thoughts on connected TV. I've talked about this recently with regards to Roku. Connected TV is the future. Then there is shopper marketing. We've talked about the partnership with Kroger and Walmart. Global expansion, I believe they went from 6 to 14% for the international revenue for the business in the last 6 to 7 years or so. Then 2021 platform update, Solimar, huge, UID to number 5, and supply path optimization. And to finish it all off, robust revenue growth as we've seen above. You can see here quarter over quarter as well. And it has delivered substantial profitability, adjusted EBITDA in the millions, profitable and growing year over year, non-GAAP net income in the millions, also profitable. Oh, and just to be clear, they have been GAAP profitable since 2013. Now there is something I do want to show you, and that's obviously the operating expenses. As you can see here, it has grown year over year. The majority of that increase comes from G&A. No surprises there. SBC has also been rising, so that was, well, it's not to be expected, but we all know the story. This is the story of 2022, which you can see more clearly right here. Stock compensation, you can see 2022, 121 million, 2021, 34.4 million. And so to conclude, the market is giving this company a premium because it is a quality company. It is growing faster than the market that it's in. It's one of the leaders, if not the leader in their segment. The market expects this company to dominate for years and years to come. And so they're happily paying a premium. Now, 2023 might obviously change that. If suddenly we see that growth is slowing down more than expected, then yes, maybe we might see another compression. It might happen. It's something to keep in mind. It's in my personal portfolio. It's actually in my top 5 for a while right now. Like I said in my Roku video, if Roku cannot really show me that they are strengthening the bottom line, let's say, probably that position will just be transferred into the trade desk. Now, I know I don't talk about the trade desk that much on this channel, but I do think that some of my viewers are holding it as well. So do share your thoughts down in the comments below. And if you enjoy this type of videos, leave it a thumbs up and subscribe if you have not. And I'll see you all in the next one. Bye-bye.